All right. Good day, traders. Hope you guys are good. And welcome to this week's segment of our weekly market breakdowns. Now, without wasting any time, let's get straight into it. First of all, I'm going to start by looking at the dollar index. Right now, we're currently on the monthly in an uptrend, and the market is looking to fill in these fair value gaps right here. Now, if we take a look at recent price action, we do not have any fair value gaps right here. So the market does not have incentive to reverse here because any order block that hasn't, or any order block that has formed on the monthly has been mitigated, right? If you take into consideration the fact that there is no fair value gap. Now, the only fair value gap that exists is this one over here, right? So if the market was to reverse, I expect to at least take liquidity from this low and then fill in this gap before going up. But like I said, I don't expect that to happen, right? So for now, we are with the trend, right? We are trading with the trend until the market gives us another setup. Get what I mean? So right now you can see that price is going up, right, in a strong trend. If you can look here, the market recently broke structure right here, and I'm expecting a pullback. So the market can continue to go upwards, but eventually I'm expecting a pullback and then a continuation towards the upside. Now, this is last week's low, last week's high. These are areas of liquidity. And then we have a young fair value gap here. So the first scenario is that the market might take out last week's liquidity and then move towards the upside or continue going towards the upside. The market can also come here to take out this liquidity over here, as well as these equal lows to fill in the small fair value gap. But I don't see that happening, right? If the reversal does not happen, I'm expecting the market to break through, through last week's high and then print a pullback to mitigate a zone. Now, when you look here, this is what you see. All right. So like I said, yeah, the market broke structure, and currently right now we are looking for an area where the market can mitigate, right? We're looking for a potential area where the market can reverse. Now, if the market takes out last week's low, right, it can fill in that fair value gap that we saw on the weekly, and this right here is the daily zone. It is a confirmed zone, right? So if the market does reverse, this is where I'm expecting buys. But if that does not happen, right, our second scenario will be the one where market violates and I need to see a strong ERC candlestick so that there is a fair value gap. And this zone right here can be the source of that fair value gap. And then once you get that, then we will buy. But anyways, these are my thoughts on the dollar index without wasting any time on this pair. Let's move on to another pair. All right. We are now moving on to USD ZAR, right? Now, on the monthly, we have a very interesting setup here. We're on a supply zone. But as you can see, there are multiple retests on the zone, right? There are multiple retests on the zone. Now, for the zone, for us to take the sell from the supply, what we have to see on the zone is a change of character on the lower time frames, right? So yeah, let's go to the lower time frames. Oh, before we go to the weekly, right? This zone, right, is currently located. Look where it's located, right? And so the market has incentive to break it because, first of all, it's an area of liquidity because it's a swing high. There is liquidity here, and then there is a gap here. And so the market has incentive to break that zone in the long run because there is a gap to fill right here. There's a lot of unfilled orders, right? So that's what you need to take into consideration, right? That the market can break through that zone because it has incentive to do so. And also take into account the fact that the trend has been going up. Right. Now, if we do get that change of structure or the change of sentiment, we need to look for fair value gaps. The first one we have is right here. The first one that I can see, right? Consider the fact that we had a break of structure here and no real, what you call this, no real pullback after that break of structure. And so if the market ever drops, it might fill in. You might see a sluggish movement towards the downside. You understand? That's a possibility. It's not really confirmed. But yeah, let's go to the lower time frame because I don't want us to dwell on this for too long. Now, here you can see that the market is actually going up to this area of liquidity over here. We recently broke the structure, this high over here, right? So meaning this is a strong low, right? And then we didn't leave any zone right here. The only fair value gap we have is from last week, right? And so what I'm expecting next week is a hammer. That hammer will act as a candlestick consolidating away from a zone. And if that is confirmed, then the source of the fair value gap will be the zone over here. And so if we get that hammer, right, and a drop, we have incentive to now reverse from this level right here. So this is more of a long-term setup, right? The market might drop to the zone. If it does, then we catch it and then we move. Basically, what I just said is we have a break of structure over here. We have a strong ears. We have a strong candlestick, right? Obviously, this gap over here represents unfilled orders. What I'm expecting is a candlestick, at least one, to consolidate away from the zone, which I expect to happen next week. After that happens, I expect the market to come back the following week to fill in this gap over here. And then if it does act that way, we have incentive to do so because we have the zone over here. And then if we get a change of character on the lower time frame, it's our signal to buy and then take profit on monthly liquidity, right? So this is the scenario that I'm expecting. Now assume that the higher time frame supply is actually valid and holds. I'm only going to sell if we break this low over here. If we don't break this low, there is no opportunity for me to sell, or at least a high probability one. You understand? And so on the lower time frame, yeah, we have a daily zone here, which is nested within that zone that I was talking about. You understand? So that's why I said the market might go back to the zone. Let's move on to another pair. All right, final pair for the week is EURGBP. Mind you, guys, there's already other pairs that we looked at, other pairs that we have positions on. So if you want to be up to date with the progress on those specific pairs, make sure that you subscribe to the Telegram channel, right? But yeah, if you're an OG, you already know what's going on. So EURGBP is an update, uptrend. We're currently in this consolidation within the bias. territory, and I think the market will target either these two zones, either one of them, right? Either one of them or both. And so if we go to the weekly, you will see that there's been a change of sentiment. Number one. Number two, you'll see that we had a correction over here and that we created a new low. And then now we're waiting for the market to break this high. So this high right here is our point of interest. So after the market breaks through this high, I'm expecting a pullback to a zone, and then we can enter a buy. Hope that makes sense. So the zone that I'm expecting to buy from is this one right here. It's confirmed because it's broken an opposing zone. We're just waiting for the market to now break through this high. And so yeah, there's no way I can tell you to capitalize on this. For now, we're just playing the waiting game, right? And so these are all the pairs that I have on my watch list this week. Hope you enjoyed this. And I'll see you guys in the next video. For now, peace.